So for recording purposes, Strat, day 12. We only got a couple of more classes after that. Then Moody, that's why I'm so on fire, because I'm about to get on the Strat. But now I'm going to be calling out plays all day, every day, even being live. Hey, even if I don't want to trade because I already traded that day, well, guess what? I'm going to teach you how to read the charts live. Hey, look, you get in this, you can do this, you can do that. So get ready to enjoy and experience that Moody's been trying to do for years. However, now's the time. Um, Also, for anybody that's been, taking screenshots and stuff like that, you don't gotta worry about that. I got all of this stuff, like little, every single slide he has in a file. I have it all, so you don't even gotta worry about that. Also, the coaching program. Even though this is full access and they're getting this recording, you know what I'm saying, with me breaking it down and things of that nature, y'all also will get this recording. I don't care that it's $7,000. Y'all also will be getting this recording. Not just the recording, but the Rob Smith course. If y'all don't want to see me break certain things down, or if y'all do, y'all can always watch that. But if y'all just want to run through it, go ahead and knock yourself out. I'm gonna drop that in the coaching for you guys, and also drop all the slides where if you needed to go back and just like, print something out to have it by your face, go ahead and knock yourself out. It'll always help you, right? So let's get this class started. Um, Thank you. You already know. Peace of love, my brother. Let's move this right here and let's hit the play button.
Hello again, I'm Rob Smith of the In the Black Quant Edge VTF here at T3 Live, and this is the Quant Edge 4-week coaching program. This is week 4, video 3 of the series where we discuss execution and risk management. As you peruse the disclaimer again, once again, when we think about what we're doing and when we start talking about the stops and how we're going to trade stuff, oftentimes people think that these stops are too tight. I've been stopped out a lot. It's important to remember that when we are trading how we do now, quantitatively, using the universal truths that we know, and these setups, we're expecting them to go immediately. And so when you see some of these stops on these setups and they seem tight, that's okay.
Right. You see how he said immediately. Now you know my universal truths on the chart. They're different. I still use his universal truths, but I have my universal truths that I know that this is the universal truth. However, that's why you hear me say I get in immediately on those sweet bottoms. Yeah, I know I could get into a losing trade. Okay, we're not going to hold it. I have enough capital to, hey, I can lose that. I could keep going on with this probability. I can continue to deploy to the same setup over and over and over until I get the exact probability of her. Make sense?
Yes.
Want to minimize the losses as best as possible because unlike many trading systems you might have been involved in, we expect the price to go immediately. So let's go back to where we were. We left off with section 4, risk management of open positions. And we were down to day trading. And so I was just saying, and we were discussing in the last video, risk management open position day trade, stop placement and execution criteria while day trading remains the same as discussed for each of the additional actionable setups, right? And all the actionable setups, how we're going to do those on actionable signals for day trading, that's what we want to do, right? Then comes down to risk management as it pertains to stop protection progression and maximizing profits by adding to winning positions. So by stop protection progression, what that means is how we're going to progress with our stops, moving them with the price as it goes along. So at that point, when we say that progression, one thing we're not going to do, it's important to remember that stops should never.
So for anybody to understand something, look, I'm just at a point where I'm gonna end up figuring out what to name my strategy, and figure it all out. Look, I can just show it to you on SMH. It's just universal truths. When you're in the uptrend, and how he was talking about moving your stops, how I like to move my stops is off of tweezer bottoms. And let me just go to I'll just go to SPY because everybody trades SPY. Well, I don't want to assume that I know everybody's traded SPY at a certain period of time, right? So, It works on any, and look, and I'm gonna just take it since I be on smaller time frames. I wanted to take it to like the 1 minute. However, let's just find a nice little uptrend, even like from here. Just talking about this trend right here, right? Squeeze the bottom. If you're capable and able to not be too scared, and it's not about, oh, I'm scary or anything. No, trading gets emotional. You can get a little, nervous or something of that nature, right? I don't like an overly positive person. That's toxic. We know that there's negative things in life. We got to be able to transmute that energy and manage it, right? So we know that that can happen in trading, that you can get a little fearful or whatever the case may be. You know you're set up, but it's just like, oh, and how does that happen? Especially if you just received a loss, right? If you're taking a loss, that is more entailed to happen a little bit more. You'll receive some thoughts like that, like, oh, you know what I'm saying? See you back into your winning streak. However, let's say that you was able to catch this tweets to bottom, or even the tweets to bottom right at the top, right? Because that's how you're supposed to trade it. Oh, boom, get in, right? However, say you caught this tweets to bottom right here, and let's just say that you have capital, or possibly that you was able to just afford to buy 8 contracts, right? And now you're holding. Let's say, boom, it goes up. I'm not gonna ever lie to you and say that you're gonna trim right there. Absolutely not. Now, if that was your target, yeah, you're gonna trim right there, right? You possibly got a little greedy and started coming down, and then got out. Not got out the trade, but let's say trim right here. Just to make this short and sweet, you do not get out until this motherfucker gets broken again. See, squeeze the bottom, squeeze the bottom. Almost got stopped out. Guess what? Did it. Squeeze the bottom. Squeeze the bottom. Squeeze the bottom. Squeeze the bottom. I promise you, if you follow that one golden rule that I just gave you, it'll become so easy trading, right? And those are my universal truths. So now let's go back to Rob. And I'll rewind it just a tad bit. There you go.
Moving them with the price as
One more time, because you just saw me moving. That's like moving the price as that's moving like your stop as it moves along. But knowing your universal truths.
going to do those on actionable signals for day trading. That's what we want to do, right? Then comes down to risk management as it pertains to stop protection progression and maximizing profits by adding to winning positions. So by stop protection progression, what that means is how we're going to progress with our stops, moving them with the price as it goes along. So at that point, when we say that progression, one thing we're not going to do, it's important to remember that stops should never be moved away from the direction of price, ever. Right? It's always going to go in the direction that the price is moving. Right? We're not going to move it lower in an up market. We're going to move it closer. So the level of defense, that's where we're going to put our stops, is called the level of defense. Depends on how much evidence is suggesting that the price will continue based off the trade checklist that we got at the beginning. Right? So the more evidence we have, we can loosen the stop. So depending on the time frame of the setup, the 30-minute, the 15-minute, 5-minute, level of defense becomes high as the setup approaches exhaustion. So if we have a 30-minute setup and we're 28 minutes into that, the level of defense increases because that's...
I'll just rewind that because I know that it goes over people's heads, right? And then before I even do that, I'm gonna also do this, right? We trade from the bottom of the hour. That's what we like to do. And not only do we like to trade from the bottom of the hour, we also like an opening candle, right? Because one, if it's an equilibrium, we know to wait. Two, if it goes 2 bar, we know to enter that trade and to continue on, right? Because it doesn't matter. Let's just say it went 2 bar right there. We see the uptrend. We know that that was a pullback. You can say bull flag in your mind, whatever is going to help you continue to execute, right? That's why even in my coaching programs, I don't like to tell people that they're doing something wrong. Now we're on one-on-one, I might get on the ass just so, you know, I can impress your subconscious mind with the right information. However, when trading, 9 times out of 10, you're seeing what you're supposed to be seeing and you're into your understanding. However, it's how you're utilizing it, right? And knowing that, hey, if I seen this bull flagging like that, oh man, I just seemed like it was gonna break out like right here, started to reverse and I got in. That was not a reason to get in. You know that that's not telling you to get in, right? that's still two down. It's not letting you, it's not telling you, hey, we're gonna push the price up. The candlestick itself is letting you know, hey, indecision because it's part of the doji family. However, it's letting you know, hey, pelican fly because it's a dragonfly. However, you still have to wait for that next candle to confirm that for you, right? The candlesticks are your confirmation, right? So hold on, I just came over here because I wanted to show you something. I just lost myself because I started teaching you about other things. Let me just see what Rob was talking about real quick. Oh, I mean, guys, most likely to take you to Bitcoin, so as that market is open. No, NQ is open as well, right? So if we come over here and we're looking at Q, and I just want to show you the market's open. This is what he mean, right? So I believe he just talked on the 30-minute chart. So we go to the 30-minute chart. We know for a fact it is 11 minutes left, 10 minutes left into the chart. First of all, for the last 10 minutes of the 30-minute and the 1 hour candlestick is one of the best times to trade because of the volatility of that candlestick, right? However, um, is now past 20 minutes into that candlestick being open, right? And we went to a high already. It can be exhausted is what he's trying to tell you, right? So one thing that I'll tell you, multiple time frame analysis was going to help you with that, right? Because we could see, right, inverse pin bar, right? You could think of a shooting star or anything of that nature. However, when you start to break this candlestick down, right, you're still seeing that a little bit equilibrium. You want to go down and truly understand it's still an uptrend, it's pulling back. Hey, if this thing wants to pull back, and this is not me showing off, it's just this will be you in due time, right? Look at BW. How fire that guy is. That's where he's going to pull back at, right there. And that's where you're going to look at to get into your trade again, right? It's not that, oh, the fair value gap or anything of that nature. No, I'm gonna make it simple and dumb. This is where it broke out and broke down at. This is also where it consolidated, boom, stopped, boom, stopped a little bit, then broke out. And if you just go ahead and put a long line right here, now you understand market structure because you'll put that online and understand, oh my God, resistance, resistance. We broke over that resistance. Yes, I can talk about the swing highs and swing lows, but let's just talk about the support and resistance. Now it comes down, support and resistance, goes back up, takes out some targets, support and resistance though. Anything above that price is going to go up. Anything that can't hold that price will go down. Not saying that it's just going to fly all the way down until the bulls say, hey, it's time for us to go ahead and buy this back up. Right. So if you see, boom, we broke all the way down, this candlestick closed under it. The next one rejected and gave us a doji, right? The next one opened up and tried again and rejected it. We knew that we was going to start traveling down. We knew to, hey, go for that liquidity right here. But however, nobody knows when it's going to go take out that liquidity, truly. We know, hey, it's magnetized over there. It can still fluctuate, but it's going to go ahead and take out the liquidity. Finally took out that liquidity, boom, took you out. If you use Moody's Universal Truths, hey, squeeze the bottom, push up, you want to move your stop. Once this candlestick closes and keeps pushing, squeeze the bottom, move your stop. Wow. Do it again until you find it again. Keep going. Oh, it's coming down. Hey, you've trimmed away. Anything that's coming down and you're still holding and it's coming down to your entry point, hey, that better be your runners. That better be your 5 last contracts, 3 contracts, or something of that nature that you're making that trade a free trade, right? We don't want to hold any losers and we don't want to just hold anything and start to hope. Hope has never got us anywhere, right? What's gotten us places is us doing the knowledge, putting the focus and concentration to it, applying what we're learning, and moving forward and continue to do that in a consistent manner, right? That doesn't mean that, hey, I trade every single day at this time, right? Consistency means, hey, this is what I do on a routine base, right? So let's go ahead and go back. So you always want to know about your candlesticks and how much time you have. Rewind it just a tad bit, and I'm gonna just let him talk away.
Time frame of the setup, the 30-minute, the 15-minute, 5-minute. Level of defense becomes high as the setup approaches exhaustion. So if we have a 30-minute setup and we're 28 minutes into that, the level of defense increases because that signal is about to exhaust. Then we don't know. And then it's based on the other things that we do know. But that signal that we know is about to exhaust. So anytime something's about to exhaust, we need to heighten our level of defense. For extremely active day traders, in order to protect gains, we're going to move the stop up aggressively using either a 1-minute PSAR, which is a parabolic stop in reverse, which I'll show you, or 1 cent below the final 1 minute bar. So obviously these can be tight, but as you'll see when we talk about the separate strategies, you can loosen them up, right? But PSAR is a trend following mechanism, but it might not always aggressively catch up that fast because it will switch as the price direction switches. So when we catch the bottom of a triangle and it starts going up, those PSAR dots might be below, and we'll show you what those are. And so if that's the
Bottom
case,
of a tribe. It's just the bottom of the Bronner formation.
then we're just going to go off the 1 minute bar because we want to protect something that we've already got. Ideally, we want to stay in winning positions for as long as possible, but only as long as the favorable conditions exist. And once again, when the exhaustion is approaching, you may choose to move the stop up to cover cost and commissions, right? And you can then use an aggressive PSAR stop to trail half or a portion of the position, right? So by doing this, the only way we can lose, so you can't, I won't say you cannot lose, because the trade could halt, or something violent where the slip of our stop is so bad that it would take us out. It's highly unlikely at that point. All right, so I'm going to reiterate that. So what we want to do then is look to add to our position. If the full position size of the original trade is not stopped out and another setup occurs wherein the stop of that setup would still render a profit. And what that means is,
Ray, you just saw me do that live today. Can you remember that?
Yeah, I did.
Okay.
that when we look at where our stop will be and we get an additional actionable, if we take that and put on additional size, we take some more, and the full position is stopped at that new level, would we still be at a profit? Then we will look to add to it. All right. Then we'll go after it. So let's take a look at price line.
We'll go take a look at price line.
So what we got here.
You gotta give me a second. PCLN. Thank you, Robbie. Is that what it was? PCLN? PCLN. Gotcha. What was the price on that? Okay, yep, it is. Appreciate you. We're definitely gonna go do our research on that and due diligence. This did not go through. Okay, so take a picture and we'll go find. Oh, that's the wrong ticker.
That's the one he said, though.
Yeah. Let's see. Mm-hmm.
So what we got here
Now,
is this is a
now I'm
30
gonna want to
minute.
know why we're gonna see this ticker on there. However, this came out 7 years ago.
And when I talked about the hammer counter shooting star here, that's set up.
Hold on.
So let's take a look at price line.
What happened to the price line?
So what we got here is this is a 30-minute chart. And when I talked about the hammer counter shooting star here, that's set up. That triggered right here. All right, so if you got in there and got long right here, good for you, right? At the time this setup occurred, price line was above last month's exhausted 1-bar rev strat here. But as an outside bar, since it's a 1-bar, we want to notice that and say that this is a fractal triangle. And if so, so long as it's above that, this triangle is expanding. That's good, right? On top of that, price line was also a bullish weekly inside bar breakout with a potential measured move. The up, the inside weak, and to the upside, right? So if we assume hypothetically that we timed that 30-minute with a shorter term setup, like an inside 5-minute bar, break above the hammer and the hammer counter shooter setup,
Sorry to pause this. Ray, the ticker symbol PCLN was for Priceline Group Incorporation, which was as well known which was a well-known online travel company. However, in 2018, Priceline Group underwent a rebranding and changed its corporate name into Booking Holdings Incorporation. As part of this rebranding, the ticker symbol was changed from PCLN to, guess what? BKNG.
Okay.
We'll talk about that one later. But yeah,
Yeah.
that's good to know.
BKG.
Look them up.
Then we need to determine our level of defense. If we think about what we know to be true, level of defense would still be low. Now we can time it with that 5 to keep it tight, but we had full time frame counter to the upside, 3 actionable signals in force at least for 5 minutes, the 5, the 30, and the weekly, and an expanding broadening formation series due to trading above the previous outside bar monthly. That's all good stuff, right? That's all real good. Now we're still never going to let a momentum hammer be stopped at the bottom, but we certainly can leave that 5 minute as is. So as the 5 minute and the 30 minute signals exhaust, right, the level of defense rises. Right? We got to be more aggressive because now we're losing our actionable signals. There's less evidence of that continuation. The weekly's still good, the monthly's still good, and we're still above the day. That's good. So, but before broadening formation risk is also present as we're going into new highs. And anytime we do that, we certainly want to be aware of any change in continuity, especially the 60, that would challenge that. So, as this trade moves on, depending on how active you are and your risk parameters and what we're doing, and other things that we know to be true, which I'll get to in a second, there's 3 options we can do here. We can move the stop up aggressively on the full position, right? And so the reason that some people will do this is because the time value of money. They want to simply be in there during the period of those signals, and once that's gone, they're gone. And that's we're going to be tight in that stop up right at the end. If it stops out, that's fine. We can look to try and re-enter later. Another way that people will trade this is place an aggressive stop for a portion of the trade and move the stop on the remainder to cost plus commissions. So what that would do is it locks in some profits, and for the remainder, at least a scratch outside of trading halt and or ridiculous slippage. All right. Another thing you can do is move the stop of the entire position to cost plus commissions, and then let the PSAR in the shortest time frame where the stop is still below our entry cross above the entry to begin the moving our stops higher. So in this case, it was a 30-minute setup, and so our stop would be cost plus commissions after that occurred. All right. And then the lower PSAR catches up, and I'll get to that in a second. But with these 3 options, all right, you'll see here that this is the most aggressive, first one. And if it keeps going, so be it. You might not get stopped out, and you still have your full position, right? But if it does, you're gone. You can look for another
Setup.
And the second one, right, aggressive stop for a portion that you can try and lock something in, and as well as trying to stay in because we want to stay in winning positions, especially
Who's that, Ray?
weaken up and measured move and all that, or just letting it continue to play out. Say, I'm just now that I've guaranteed that, that I've heightened my probability that things are going to be at least even, and for the rest of the day, just look to add to it.
I don't like the third one. I tried it.
So we can see how these 3 options played out as far as price line. This is
be on that chart all day
from this recording. Option 1, move the stop up aggressively on the full position. So an aggressive stop on the full position with the exhaustion of the 30-minute hammer counter shooter signal would have been successful, but would have stopped out shortly after the exhaustion and backed off. However, the good part about that is risk is gone. You're out, right? It provides an opportunity to capitalize on another one. Later in the day, there was a 15-minute bullish inside bar breakout, and I'll show you that in just a second. But you're out, and so that type of trading is very specific. Say, I just want to be here when these are in force, and as soon as they're out, I want to be out. And I can look for an additional setup. This is a lot more aggressive trading, right? And it's not for everybody, but that's what we're here to consider, and that's when we talk to each other, we'll consider all this. So the advantage of the strategy, it maximizes the time value of our trades, and because you make the most in the shortest amount of time. So that's what we like. Some people like that. The drawback here is missing the additional profits as the long-term time frames are still indicating higher prices. And so should it just tick down a little bit and then off to the races, you might have a tough time getting back in. But that's the good and the bad there. Mostly good. Option 2. Place an aggressive stop for a portion of the trade and move the stop on the remainder to cost plus commissions. So in the second scenario, the trade would have been stopped out on a portion of the position from the aggressive PSAR, moving that up. Once again, I'll show you all the PSARs in just a second. It's much like a moving average. The remaining position would have held for the rest of the day and provided an opportunity with an additional 15-minute signal later, which I'll show you, which is good. So you reduced your risk, and then were able to go back in and add, as well as let the additional or the original portion continue to play out. Option 3, move the stop on the entire position to cost plus commissions and then let the PSAR in the shortest time frame come up and cross and start moving up. And so that shorter term was going to be a 15 off the 30. We're going to get to that in just a second. So it would have made the most profits. This one would have made the most. Right? The original position never stopped out, never came close. And then as the PSAR caught up to the next 15 breakout, we were able to add to the position. And it wouldn't have stopped that out until the very end of the day. So we can take a look at what I'm talking about. So if we assume the original 5-minute setup was at or near the highs of the Hanner Commerce shooting star setup, aren't we just be above the hammer at 1631? So that 1631 is right here. These two 15s formed that hammer. So here's where it broke up here. Didn't make a lower low for a while, right? So that was very clean and good. So the stop would have been placed 1 cent below the price indicated by the blue dot PSAR once it starts crossing, right? So when I talk about moving the stop progression, our stop would remain off that 5-minute here and then move up to where we took it, plus commission, so about here. And it would stay there while this slowly moves higher, like it's like a moving average, it trails the price. So it would stay there until this crosses. And once it does, then we can start to move up. The stop goes 1 minute below these, which never gets stopped out. And as a matter of fact, at this point, right, since we're so close to getting stopped out, what we're going to do, because if we take this and it comes down here, we're still at a profit, we can add right here and then keep that stop right here and then move, and then by the end of the day get stopped out. And so that would have made the most money, right? All right. So the PSAR combines with the actual signal for us to add. And so although this made the most profit, it also comes with the most risk. Because the first two lock in guaranteed profits, right? Or lock in something.
I like the third one.
Well, the third does not.
I
right?
definitely don't like.
So if had it gone up and come all the way back and stop you out, all you're going to do is scratch. However, we take these based on the trade checklist. There was evidence as to why this to choose this strategy. So like after the 30-minute signal exhausted, our stop was still above the opening prices of the month, week, day, and the weekly was an inside bar breakout and was still in force, right? So thus, assuming the trade isn't stopped out, those conditions would have to remain true. So anytime the 60 would go back green, we would be back in full time frame continuity to the upside. If you go back to the trade checklist, what else did we know to be true at that point? What we knew last week was the S&P SPY was also inside, outside, inside week to the upside, right? So we had reason to believe that that would continue, right? We also had that in the NASDAQ, right, and the Dow Jones Diamond. So we had this simultaneous break going on to the upside. So we did have reason to believe that strategy would work. It's not for everybody, and like I said, if you're really active, oftentimes you might want to try and do the other ones because you want to continually try and capture something and then try and go after, other trades during the day. In addition, if 60 minutes goes into conflict by flipping red but fails to stop us out, right, the supply would be indicative of profit taking, not actual short selling, because we still have the monthly and the weekly and the daily green. So anytime that flips back, we know we can add because we go back into full time frame continuity to the upside, right? And so it's being able to know that that counter should only go so far. And then if it does and it does not stop us out, that's exactly when we can look to add to these positions. Section 5, the secret weapons, trading the VIX ETNs. And this right here is our bread and butter and why we call them the secret weapons.
Oh my God.
So the VIX is the ticker symbol for the CBOE Volatility Index, a popular measure of implied volatility of the S&P index options. The options contracts within are traded based on the option premium people are willing to pay to protect their positions.
You dig?
So what that means is the more risk that's out there or is perceived through these options, right, show the fear in the market. So it's much like if you have property, coastline property, and you need to protect yourself from a hurricane.
Now you understand when I be dropping like the fear and greed index, and then I'll be dropping the VIX, and I drop, huh?
And you're going to pay more for home insurance than you are than somebody in the upper Midwest. All right. Now, because of how this is constructed, right, the volatility will expand and contract. It can't go higher indefinitely, nor can it go to zero. Right. And since the options will expire, positions cannot be held long term. Right? You cannot hold these positions more than as long as there's option contracts outside, like a stock where you can. However, the VIX ETNs, and the ETN stands for exchange traded note, trade like stocks and need to attempt to mimic the action of the VIX by holding VIX options that do expire. Right? This is the beauty of this trade. All right? They have to move the contracts.
Mm.
Right? And this is why we're going to see the effect that we do. All right? Since the VIX ETNs need to continually replenish their options holdings, they suffer from significant decay as the options expire and they have to buy new ones.
Mm.
Right? It's called a contract roll. And it guarantees, much like we've had to rephrase a few of this stuff, guarantees that these products will decline over time. Right? They don't have a choice. Right? Now, this does not, however, prevent them from having significant price swings. They can go up a lot, as I'm going to show you. However, over time, due to their need to roll in new option contracts, they must decline. They have to. Right? So the main VIX ETNs to consider are VXX, UVXY, and TVIX. These are the decliners. Right? We can also trade SVXY and XIV on the upside, but these are the perpetual decliners. But don't take my word for it. Let's look at the and TVIX. These are the choice. Right? Now, this does not, however, prevent them from having significant price swings. They can go up a lot, as I'm going to show you. However, over time, due to their need to roll in new option contracts, they must decline. They have to. Right? So the main VIX ETNs to consider are VXX, UVXY, and TVIX. These are the decliners. Right? We can also trade SVXY and XIV on the upside, but these are the perpetual decliners. But don't take my word for it. Let's look at the TVIX prospectus itself, right? And you can read this entire thing about the risk, but the beauty of this gets into the bottom part. As explained in risk factors in this pricing supplement, because of the way in which the underlying indices are calculated, the amount payable at maturity or upon redemption or acceleration is likely to be less.
Yeah, I may forget this. So I like Oxy for calls tomorrow. That's ticker OXY. Don't ask me if it's going down. I like calls tomorrow on Oxy.
less than the initial principal amount of the ETNs, and you are likely to lose part or all of your initial investment. In almost any potential scenario, closing indicative value, as defined below, of your ETN is likely to be close to zero after 20 years, and we do not intend or expect any investor to hold ETNs from inception to maturity. That's my kind of short. However, some people, for this because they can.
Let's pause this real quick. My bad. I just gotta take this off my chart. Trying to get on TradingView on my phone and doing all this weird stuff. Get on my. Where's this PC? Because I just added you. That's cool. Let's just put a spot right here. There we go. And let's close that chart. There we go. I appreciate y'all patience. I'm gonna go try to find another banger.
Can have significant rallies during periods of expanding volatility. It's for this reason alone that even though people are aware of this, they'll shy away from this trade, right? Because they're scared. They don't know when it's going to do that. We do, right? Those people are not us, right? So we know what we're going to look for so we don't get run over like that, right? And if you read up in here, it also states that we don't suggest holding overnight. You should lose money if you hold it overnight. It's really beautiful here, and that's why you can read this. But mostly, if you hold until maturity, it says your return is likely to be close to zero. So let's look at UVXY. Now it's important to know that this chart was adjusted for reverse splits, which they have to do all over the time, so they don't go to zero. Right? Otherwise, these things would be trading in sub-pennies and because of this. So these moves did not actually occur at these prices, but these are real. Right? These are real moves. Right? So as you can see here, when I talk about significant rallies, this is $400 up to $1,400. This is $100 up to $1,400. You can see these moves, significant. We need to get out of the way of those and wait for those decline here. Right? So there's two conditions that we need to be aware of when they're going to do that. Right? First is going to be full time frame continuity, the downside, and the broader averages. Right? That means the market's going down as far as we know. Now
Falls on SMCI again, Ray. I know you liked that one. Call again tomorrow.
in and of itself might not do it, but we want to be aware of that condition. Since people are willing to pay more for insurance during market declines, the VIX and the VIX ETNs are most likely to experience spikes during this condition, right? So not always, but certainly if the market's going down on all time frames, that's when people are more likely to do this, first of all. So it's important to remember, in an orderly market, the front month or most immediately expiring option, which would be closer in time, have less premium than the back month, the further out month's expiration options, since there's less time for the scenarios to play out. So very orderly that you'd have, say in the front month, you'd have $1 of premium, the next month 2, and the next month 3, because there's more time. This orderly condition is known as contango, right? These things hate contango, right? They don't hate down markets necessarily, but they hate contango. So however, during periods of heightened fear, which can result from the result of full time frame counting the downside, broader averages, and or an upcoming event, the known event like the Brexit or the presidential election, the option time premium can reverse. That order can go backwards, right? And that's why it's called backwardation. And this means that there's, in that front month options have more price premium than the further dated back month options. During this conditions, the VIX ETNs can rally significantly, right? We want to know about this for sure. So we're monitoring those options, and we're watching time frame continuity in the S&P. So second condition, once again, is backwardation. Since VIX options contracts expire each month, you can track the order in which these people are willing to pay for insurance. We track this. So how are we going to do this? We're going to monitor watching option contracts at VIXCentral.com or CBOE.com itself. And that will show us the level of contango, where those prices are, and if they start to move. We can watch the VIX itself. We can look at we will know whether there's an event coming up, and we can know whether we have time frame continuity downside in the S&P. All those things to make sure that we get out of the way of this stuff. It's important to remember these ETNs trade like stocks. They are not stocks. For this reason, they must be approached differently than the strategies for actual stocks. Right? These are volatility ETNs. They're not companies, not stocks. Since these products spike during periods of volatility, look to only trade them from entries that come down off the highs of the broadening formations. Right? We want those spikes in volatility and then come down. We do not try to trade these things momentum. Right? We can use momentum setups off the top, but not going into the lows. All right. So once again, they're not stocks, have no inherent value.
Let's go ahead and rewind that back one zone.
Right. We can use momentum setups off the top, but not going into the lows.
Four.
All right. So once again, they're not stocks, have no inherent value. We do not look to cover the position, even though the price has declined to the bottom of the broadening formation. Due to their decay, they are more likely to continuously make lower broadening formations than to return back to the top of a previous broadening formation like stocks do. So when we see stocks, they can bounce around, come all the way back up. These things are less likely to do that because of their decline. So if you look at this chart here, you'll see here was the higher high, the lower low, the higher high, the lower low, than here. Come off of that, boom. Slight higher high, reclaim, never comes back. Comes up into here, reclaims, never comes back, right? And so here you can see stuff like that comes up and then never comes back. Comes up, never comes back. So you're just going to continually see this series, all right? So we can look to cover, right? We want to stay short these things, all right? Believe me, we want to stay short these things as long as we can. So we can look to cover during two conditions, or any if the entry begins to, we'll look to cover during these two conditions, or if any entry begins to go negative. Remember, there's no reason to take any heat on these things, right? If they start to go against you and you're losing money, you get out, because we can always get back in. Since we look to enter off the tops of broadening formations, we can also look to cover if we see a broadening formation expansion to the upside, and we see those outside bars and it's taking it to the upside, right? If it starts to give us a signal to short it, we can do that. But if it gets outside of that, that's when we want to start covering, because that's where we can get hurt, right? This protects us from the further spikes because we know what they can do, and allows us to re-enter later should the triangle be reclaimed to the downside. So even if it expands that triangle, we get out, and then it comes back in, you can hit it again, right? Because we know that it's going to continually have this decline and this decay, right? So unlike stocks, right, we want to not cover. We are not afraid of the bottom of the triangle because it's more likely to just keep falling down, right? So we're going to continue to watch this series. We want to be mindful of a change in time frame continuity, new month, new week, right? Because that can affect it. But for the most part, VXX has declined an average of 60% a year since inception. So over time, we know we're going to continually win on this trade. Wherein many people will look and say that the market is overbought and think that these are going to come down. That's not true, right? These things do not dislike a down market. They can stomach that. Even time frame continuity to the downside, they can stomach, right? What they hate is the contango and the options because of how they're constructed. They have to continually replenish those options. And when they do that, that's going to continually cause this decline. So finally, we can look at some live charts here, and just going on today, an example of one of the things we've talked about. But most importantly, I want to finish with the sequence of when we look for things. Right? So if we go to a situation just for today, this just relates trying to put a bunch of the concepts that we've discussed together. It's through this course is how something would play out just today. Let's take a look at NVIDIA. So as far as we knew to start off the month, NVIDIA was an inside month and went to the upside. You can see that went to the upside, went to new highs and took that out. At that point, it goes into triangle risk because we're in higher highs. It's not the end of the world unless something changes.
Thanks.
Right? So last week, it went to the higher high, but then formed a shooting star. And we're still
I'm gonna help y'all see something.
Early in the month.
We're just gonna do it off of his chart.
Upside, you can see that went to the upside, went to new high.
You see, I went to the upside, went to new highs because it took out that liquidity, right? Look what, hold on, let me move this. He's on a monthly time frame. This is how you read charts. Watch this.
And took that out. At that point, it goes into triangle risk because we're in higher highs. It's not the end of the world.
All this is important. The mind starts to conceptualize how important it is once you can read the chart. If you don't know how to read the chart, it's like watching me do a class and you're like, damn, this shit's like 2 hours long or an hour long. All the extra stuff that I'm saying is the most important part because this is the simple part. To know how to read the chart is the simple part. All the emotional thing is the most important part, right? So watch this.
World, unless something changes. Right? So last week, it went to
See how he went from he's walking down the chart from monthly to weekly. That's what most people don't pay attention to. They be like, but what time frame? Da, da, da." Watch watch the analyst. The analyst can't lie to you. The analyst is you. If you look at my chart, you will see me go to the time frames. Like, because I can't lie to myself. I need to see what I need to see. You know what I'm saying? So now he went to the weekly, which breaks down that monthly into 1, 2, 3, 4 candlesticks. So now you can see how that candlestick truly reacted and took out that target. 1, 2, 3, 4. So in the beginning of the month, it pushed up. It never took out that target. It went straight to the resistance. That's why I keep telling you, support, resistance, support, resistance. This is just a bounce area. That's just a rejection area. Once you can really conceptualize that, you stop thinking about wicks like that. You care about how flush bodies are because that's your support and resistance. You don't see, look, he's now on a weekly chart. Say you caught a tweezer. Wow. You don't get out. Wow. As soon as that one finally closes, right, and it pushed up, put your stop right there. Wow. Keep going. It don't matter if it goes down. Once that tweezer comes right back, wow, place your stop right there. Keep going. It's beautiful, especially if you're a swing trader, right? So, yeah.
the higher high, but then formed a shooting star, and we're still early in the month. So what that does is that sets up the counter signal, the weekly shooting star, or if it holds and starts going up, it would have full time frame counter to the upside.
You know, Moody's gonna say, hey, that's the weekly shooting star, right? The monthly, you've seen the shooting star on the monthly, bringing it down to the weekly. I'm now seeing the evening star breaking straight through, and it broke through the support. We definitely gonna go take out that liquidity, and then that liquidity is right at the 50% retracement. It's just so easy. And then I can see the bounce right here. The bounce hit the fucking rejection, the top of the candlestick bounce. It's just too easy.
As we start the new week. So we can go either way on this. But as it takes the weekly shooting star down, the daily, weekly, and 60 are now in control over the monthly so long as everything's going down. If we
And that's important to know, like when the time frame is in control, right? Because if the 4 hours in control, man, that's the 4 hours. If the 4 hours in control and it's the first 4 hour candle because you only get two of them, it's a wrap. We're in control to 12 o'clock, my guy. Because that's when the new candlestick to the 4 hours is gonna come out. If you're really reading your chart, how you're supposed to read it with extended hour.
look at the daily, you'll see this as an outside day fractal triangle, which is expanding to the downside to help accelerate that shooting star. We can then go to a 15-minute chart, and you'll see an inside 15 here that broke below 111.01. And as it gets down into here, since we're in the new month, the monthly opening was 110.58, which now flips it back into full time frame continuity to the downside. It's a very good trade today, but it's important to understand how the series plays out. Right, every new week, every new month, every new day, that we can go from the most bullish scenario right back down the other way and counter. So we always want to remember that. To finish, I want to just touch on a few things on how we go through the sequence of what we're looking for at any given time. So this is February 2017, and the end of the month occurred at the end of the week. So there was only a Thursday and a Friday left in the month. That's expiring, right? It's also, that was over here. So these are the last 2 days of the month, and this is Thursday. It's important to remember that we want to know that on the first Friday of the month, we're going to have a jobless claims number before the market opens on Friday. Oftentimes we'll see a lackluster market before that. So we always want to be aware of that. Participants don't want to do much in front of that oftentimes. The good thing is what that does, much like the turnaround.
Hey, do y'all know if this is a live chart or if this is a chart that's closed? Drop a one in the chat if you do. If it's closed, if you don't know, just drop a one. If you do know, drop a two. I'm about to start making y'all do the knowledge. One. One. Got you. So just look right here. Look at the price. This can't never lie to you, especially the candlestick if it's moving, right? That's why we always look at the live candlestick. So let me press play.
Around Tuesday concept is because it's the first week. Whichever way that goes, it's going to have to confirm or negate by going in that same direction the next week. So that helps us to start the ball rolling for the month.
How do you know that? Because even when he's moving, this is his cursor. When he's moving, this is what will move. Because that's the price action. Open, high, low, close. That's the price action. However, see, and it should say close, and you don't have a close because 227.53, 222, that was the last. Nope. So it's on the candlestick that he's looking at. However, we can see that candlestick moving. You can see the price moving as well. Yep, definitely live.
Over the weekend, I make the weekend video where I map out exactly what is occurring, has occurred, and potentially can occur, whether we have a divergent market, whether we can look for a simultaneous break come Monday. You also have the Excel spreadsheet, which is the blueprint of the market. Our spreadsheet shows you exactly what's in force, what potentially could be in force, and we go from there. As we come in on a Monday morning, on any Monday we know that we have time frame, 3 time frames starting over again, right? And so we don't uncouple until the second hour on Tuesday. So those on Monday afternoon, those inside days and Rev Strat setups and shooting star and all hammer setups for Tuesday becoming important to see if they confirm or negate that initial weekly move. As we come into a Wednesday, sometimes there's Fed meetings, Fed minutes. We want to know about the financials coming into that, as well as the market might become lackluster at the end of that. We also know that on Wednesday morning, in the second hour, that we have an energy number, oil inventory. So on Tuesday nights, we want to be able to look for the setups that we see in the energy names. As we get into Wednesday, we once again want to start looking at time frame continuity, how many of these in the second hour that we have.
I'm gonna rewind that for y'all.
Wednesday, sometime Tuesday. So those on Monday afternoon, those inside days and Rev Strat setups and shooting star and all hammer setups for Tuesday becoming important to see if they confirm or negate that initial weekly move. As we come into a Wednesday, sometimes there's Fed meetings, Fed minutes. We want to know about the financials coming into that, as well as the market might become lackluster at the end of that. We also know that on Wednesday morning, in the second hour, that we have an energy number, oil inventory. So on Tuesday nights, we want to be able to look for the setups that we see in the energy names. As we get into Wednesday, we once again want to start looking at time frame continuity, how many of these not only actionable signals are in force, but do we see long green or red bars in anything that don't have actionable signals we might want to be aware of? We also want to start coming into, are we seeing inside weeks coming into Wednesday? And if things start to be lackluster in certain inside weeks, we know there's a high probability that we're going inside on that stuff, and we would probably avoid it. Much too, as we get into the second or third week of the month, are we looking at things that are going inside month? Can we expect consolidations, or are we expecting expansions? When we come in every morning, we're going to look at the gap list because we want to identify where volatility is. Right? That's the first thing we do. And every night, I make another video where I break down some of the actionable signals we're going to look for the next day. So on Monday nights, I'll be talking about the turnaround Tuesday. On Tuesday nights, we'll be looking for energy names. And this will progress through as we work together. So this concludes week 4, the Quantedge 4-week coaching program, execution.
Execution wish management. The next class is 3 minutes longer than this one. It's fire though. It's fire though. And then he starts trickling back down to like the 29, 17, 15 minute videos. And there's only 1, 2, 3, 4, 5, 6 more classes. And I'm honestly gonna combine some of these together. So I'll say like 5 to 4 more classes. So 6 to 5 more classes or 4 more classes. Bada bing, bada boom. That concludes that. Oh, sorry. Hold on. Let me